Hey everybody, this is Brian, Bearable Traders. It's Sunday, October 25th, so let's take a look at the week that was, and we'll take a look ahead what we got coming up for the week. Lots of earnings, as you can see here. Apple, going to be a big one, Microsoft, AMD, Amazon, Facebook, Google, big names, big tech names. So should be an interesting week. Twitter's been on fire along with Snap, and we got the MasterCard, and Boeing will be another interesting one. Some Chinese names, Baidu. Anyway, you get the message. Tons of interesting companies that are going to be reporting this week, which should add to some volatility that we're already expecting here with the week or so heading up into the election. Let's take a look at some of the indexes here, how we did and what things look like going forward into the week ahead. Right now we've got futures trending down a little bit, maybe on some concerns that of the new infection rate with the virus, of course, adding to some volatility as well, of course. So here we got the transports had a nice day on Friday. Bit of a strange day, dipped down, came back up again. And on a weekly, we're just still stuck trying to break out of this 12,000 range here. RSI is still banging its head. We did have a bit more volume last week. Nothing too notably different. So we're still kind of stalled out here on the transports. The Dow down on the day on Friday. On a weekly, we were down about a percent or so. Again, we're just kind of banging our head here on 29,000, and volume a little bit lighter than normal. Stochastics flattening out here. So again, it just seems we seem to be just treading water here right now. Daily on the Qs, again, the Qs are not doing very well. Technology has been pulling back, and we've got this rising interest rate environment. We'll talk about that in a minute, but you can see here we're finding a base. We're at some levels of support, which are these moving averages. Again, volume really dropped down last week on the day, Friday, I should say. Let's see what the week looked like. Down on the week, 1.33%, and again, volume pretty light on the sell-off. Our side rolling over a bit here, but again, we're just a little bit of a topping pattern. Some people would look at that and think maybe it's a head and shoulders, and we'll have to see if that plays out or not. I kind of doubt we're going to see any kind of significant pullback here, because the market is still expecting a stimulus package. Whether it happens before or after the election, we shall see. But no matter what party gets in, probably going to get some more Fed money pumping the system up here. A SPY on a daily, you can see here, we did finish up on the day, had a nice bit of a comeback day after selling off. Again, these moving averages holding, and volume on the day was a little bit light. Friday, of course, RSI heading up. And then on the weekly, let's take a look at the weekly here. Again, down a 0.5%, a little less. And again, topping pattern here, just in anticipation of some stimulus maybe. Stochastics, everything kind of looking good here. Nothing, doesn't look like I think anything's going to really sell off. And this was the standout of the week probably in terms of the indexes, the small caps. You can see here, Friday up almost more than 0.5% on the Friday. Trading day had a nice strong day on the IWM. Stochastics turning back up again here, looks pretty strong. Let's take a look at how we looked on the week again. The small caps actually look pretty good, and this is part of probably in part a reflection of improving the perception that the economy is improving, and we'll talk about that right now. We can see here rising interest rates. This is the 10-year, and generally speaking, when you get a rising interest rate environment, that generally means that the economic conditions, or at least investors feel the economic conditions are improving. And what index is going to do the best in that environment is going to be the small caps. And the other one we'll just look at here, let's look at the weekly. Again, you can see here, weekly, It looks like we've broken out here from this little bit of a range, and we're going to be coming back up here to this 0.91. But this is a big move for a yield, especially on a percentage basis. You can see the stochastics here. Maybe going to maybe doing a little work turning sideways for a while, but generally speaking, improving economic conditions. Dollar again, really getting beaten up a little bit here. Um, Stochastics maybe putting in a bit of a double bottom, so maybe we get a bounce on the dollar. Let's just take a look at another index that I don't usually look at, which is not the small caps, not the large caps, but the IWR, which is the mid caps. And again, mid caps looking pretty nice here, and they're looking like they are going to break out. Again, this would be an economic recovery trade. So IWR, IWM looking like the best indexes to be in for the coming week. Let's take a quick look at our actives. This is the one I'm still holding. This in agriculture, I was looking at some of the corn was breaking out. Price of corn was breaking out. Wheat looking like it's on the verge of breaking out. I think this goes higher, and that's why I'm still holding it here. It still looks strong. Here's the weekly chart. You can see here we're putting in a bit of a ascending triangle. I think we're going to break out through this 15 next week, and next stop could be 16. So another dollar move in it. Had great volume on the week, good volume, building volume on a weekly. Stochastics looks strong. RSI turning up here, higher low. I think the DVA still looks really good, still holding that. Intel I bailed. This is a reason I don't like to hold stocks through earnings. I did sell a lot of it through these pops when I got it back down here, and then when we in the aftermarket when it started to sell off, I just dumped the rest because I knew it was going to be weak. Might look at another entry here. Here's what is it? 46.65 was the low. If we do test that area again, I might try to take an entry if we look like we get a bit of a bottoming pattern there. So yeah, another reason, and that's why I really lightened up. I hardly had any shares left, just holding a few just in case we got a pop, but of course we didn't. So I don't, again, just don't like holding stocks through earnings, and I really shouldn't have broken my rule there. Should have just dumped them all. Okay, so let's take a look at some of the stocks we can watch. Again, things are going to be a little volatile this week, but I think overall things look positive to be going higher. And yeah, let's start out with looking at some scans. So BNR was one I was kind of watching over the last week or two. It's been looking pretty good here. You can see it's kind of breaking out, and really missed the entry here. So I kind of hesitate to chase it, but I want to keep an eye on it, because if it does pull back a bit tomorrow morning, maybe we'll get an entry around 29 with some maybe some upside here close to 31. But this looks relatively promising. A little bit overbought, both on all the index or all the indicators. So again, that's why I'm gonna be cautious about chasing it up here. But it does look good. Keeping in the theme of generally improving economic conditions, CCL or any of the cruise lines might be starting to look interesting. Here you can see CCL's kind of formed a base around 14, maybe a little bit under. We're at 1536. If we get a bit of a pullback here to one of this moving average, maybe 1490 or sort of 1480 range might be a decent longer term hold. If as the virus gets under control, which it doesn't appear to be right now, but once this vaccines start coming out early next year, hopefully early to mid next year, people will start venturing more back into going on vacations again, and this could be something that would definitely benefit from that. So you might need a little bit of patience here, but CCL might be a decent much longer term hold. So Keeping an eye on that one. A pullback would be, and a hold of around 14 would be a good indicator. DraftKings really big sell-off. Had a bunch of things happening. Um, with different some of the news releases. I think they did a secondary offering as well, which of course didn't help the price of the stock. But that secondary offering was up here somewhere over 50. I think it was 52. So we've really pulled back a lot. We're back into an area where, there's been resistance. Resistance now becomes support. This is kind of where we broke out from. And we're just kind of holding this level here. So maybe 40 looks like, what is this? 40, 43 was the low on this candle. That would probably be an area where you'd want to see the price hold. The low on Friday, 41.76. So again, this might be a bit of a bottoming pattern here, might be a decent opportunity to take a position in DraftKings. And you can see here volume pretty light on Friday. Selling wasn't overly aggressive, so maybe RSI or stochastics seem to be turning up here. RSI maybe putting in a higher low. We've got a bit of a turn here on MACD, so yeah, maybe DraftKings could be a bit of a bottom fishing play here. EDC, this is the emerging markets, of course, do well when the dollar fades, and also improving economic conditions. And this EDC looks like it's just on the verge here of breaking out. This is an ETF. Just be careful with this. It's 3 times ETF, so you get triple the pleasure, but triple the pain if it goes the other way. So yeah, as long as the dollar's weak and economic conditions seem to be improving, the market emerging market fund looks pretty good. And again, on the weekly, it looks like we're breaking out here. This is the daily, actually. What was the other one? Weekly? Well, that was a daily too. Sorry about that. And yeah, if you'd want something, you want to play this, but something less aggressive, not a 3 times ETF, you could trade EEM. I'm in my gold position right now. Sold it on this pop, and we're just seeing where gold's going. It's down right now, and it's kind of concerning because the dollar's weak. So the gold should be strong, but it's not behaving well. So we're just going to sit back and watch this. Maybe if it gets back down to 38 on the GDX, I might consider taking an entry. But right now, stochastics below 40. Which means rallies will tend to fade. RSI looks like it's still heading lower, so I'm not enthusiastic about gold and the gold miners right now. This really got overbought. Just an illustration here of how things just go crazy and up to a point, and then buyers basically just run out of. They're just a number of buyers just run out. The marginal buyer up here just wasn't there, and then the selling kicked in, and we really had a tumultuous sell-off here. You can see high volume again. The people that were waiting to buy in bought in on this date, but then we had more selling. So it'll be interesting to keep an eye on JKS tomorrow. The bottoms are in on these candles, 61.50. Low here was 60.50. So 60.50, and then we've got a moving average here that's coming up around 59. So we'll be interested to see if it can turn here and maybe head back up now. Usually give it the 3-day rule, 1 to 3 days to settle out a little bit. So we'll see if we get a bit of a pop here, but definitely the level you want to trade against is 60.50. And I'll show you Snap in a minute and how that compares. Let's actually take a look at Snap right now. And Snap is doing exactly what JKS did. Huge move up. And I'll just, don't usually have this on my chart here, but bear with me. I'll put in a Bollinger Band, do the 3 standard deviations, because that's really extreme. And you can see here it's way, this is the 3rd standard deviation on the Bollinger Band. You can see it's way into that. It's just stocks don't stay there. They typically do reverse once they get to this level, and I think snap is due for a bit of a pullback for sure. Everything looks really overbought. 92 on the RSI, really overbought. So the only challenge is I'm not sure how much of a pullback you're going to get because I've heard a lot of people talking about this pullback on Monday. So when it's anticipated like that, sometimes it doesn't always play out exactly the way you expect it would. But I definitely think it is overbought for sure. KBNT, this came up on a scan, nice breakout from an ascending from an ascending triangle here. Had this base, could be good for up to about 360, 365, 370 from this level. Don't want to chase it here, but maybe if we get a pullback tomorrow, this is looking really nice. Was watching that one over a week ago, but I missed an entry on it. Rocket could be putting in a bit of a bottom here. We've got bottom here, sort of a double bottom, popped up, and now we're getting back down. We're testing this level again here. So there's your level to trade against, roughly $20. So again, we get a bit of a pullback on Monday because indexes are looking like they're going to open a little lower. So might be worth taking an entry around $20 for another double bottom on Rocket. Silver's looking a little better than gold. Again, it's Friday, selling off on pretty low volume, didn't drop very much. Silver is more of an industrial metal as well as sort of the poor man's gold. So silver is still looking a little more attractive than gold, although stochastics do look like they're putting in a top here, double top. RSI is just hanging in here, so just more keeping an eye on silver than gold right now. Here's Taco, Del Taco. Again, put in a bit of a bottom, had a nice pop up on Friday. One thing I noticed, a lot of insider buying on this one. Volume was pretty good on Friday. Stochastics starting to turn up. MACD starting to turn up. RSI starting to turn up. So, it could be good for a pop back up to 9 at least. And again, we get a bit of a pullback at the open tomorrow. Might be worth an entry somewhere around 880. Be a good level to trade against. And then maybe get a nice follow through. Always like to see a lot of insider buying, and that's been happening with Del Taco. The energy sector has been moving up, but in terms of the stocks, and we just had a merger announcement on Sunday. Synovus was buying Husky, so that'll be in play. But a bit of a merger mania going on in the energy space, but oil is not looking particularly healthy. In fact, it does look like it's breaking down. So energy stocks are going one way, like the Chevrons and the Conocos, and oil is going the other, which is kind of a curious anomaly. So RSI is breaking down on oil. Oil's down right now in the futures markets. So I don't know. I don't know how oil or the energy sector like XLE can rally on dropping oil prices. Anyway, here's another ETF that you might want to consider: VanEck's Vietnam ETF. So a lot of companies seem to be moving with all the China stuff going on. A lot of companies are moving some of their production to Vietnam, and you can see Vietnam ETF here. It does look like it's getting ready to, or it has already broke out on Friday on volume. So looking for a little bit of a pullback maybe, back to sort of 1520, and then trading against the 15 level, and then trade it for a move higher. This is the weekly chart, so we've got sort of 16, 17 possible targets, and that's it. So I went a little longer than I usually like to do. Sorry about that. There was a lot to cover. But yeah, hopefully we'll see you in the Bearable Trading Room in the morning, live YouTube, 8:30, pre-market show, and then trading the market open at 9:30. And again, this is my book, How to Swing Trade on Amazon, if you haven't checked it out. Have a great evening, everybody. We will see you hopefully in the morning. Bye for now.